daily market commentary for Monday, the 16th of September 2019. I hope everyone had a great weekend, and welcome to a new week. It should be a very interesting week with obviously some fallout from the situation in Saudi Arabia over the weekend, and obviously have a Federal Reserve meeting during the week as well, Wednesday, which I'm sure will cause some volatility in the market. So get ready for what should be an interesting week. As we begin Monday, it is all about the fallout from the Saudi situation. For those of you not aware, there was an attack on Saudi oil installations over the weekend. This has had an immediate effect on oil supply, certainly cut the amount coming out of Saudi Arabia by around about 5.7 million barrels a day. And the net result of that would be for both crude and Brent oil to open higher by well over 10%, and for equity futures to point lower for the opens. For FX, dollar yen bore the brunt of the uncertainty, moving as low as 107.50 in early Asia. Gold moved the other way, hitting a high of 15.12, which I'm sure will be a great relief to the bulls amongst you who would have read my technical piece yesterday on gold, as we were teaching quite close to support levels around 1480. Euro and sterling both moved lower during the day against the dollar. Sterling, has had quite a strong rally off the recent low around 119.50, and ahead of today's meeting between Boris Johnson and the EU officials, traders seemed pretty happy to take some profits off the table. Euro, on the other hand, suffered from the lower oil price. The higher oil price, and also from one ECB member's comments. The incoming ECB head Lagarde would like to keep an ultra loose monetary policy. Not really a shocking comment, but a timely reminder of the current monetary situation in Europe. Don't expect rates to rise there anytime soon. So as the news day gets going, crypto sees a quick sell-off, with Bitcoin down a couple of $100 down to 10,130, and Ethereum reversing some earlier gains, slipping back to $189. Dow futures point to a lower open by around 100 points as traders digest the likely long-term effect on oil prices from the weekend's events in Saudi Arabia. Euro dollar begins the day in the US session at 110.25, and sterling at 124.5, dollar yen at 107.88, and gold around 1500. US bond yields have moved lower, with the 10-year down to 1.86% to start the day. And the recurring theme for the US session would really be dollar strength, even with US yields lower. We saw dollar yen rally above 108, and euro dipped down to a low 110.94 as the market looks for some safe havens, with the price of oil showing no sign of moving back lower. Add in a Trump tweet about the strongest dollar ever, courtesy of the Fed, and the greenback was in for a good day, albeit maybe for the wrong reasons. For the crypto markets, the bulls might have expected some love with all the geopolitical tensions, and eventually we did eke out some gains very late in the day, with Bitcoin rallying back up to 10,300, and ETH bouncing just shy of the $200 mark. As the day draw to a close, equities never really did recover from their initial fall, with the Dow Jones closing lower by 142 points, and the dollar finishing near its highs, dollar yen at 108.10, and euro sitting at 110 the figure. Gold ended up closing just a little below 1500 on the day. So, the conclusion from all this is, obviously we've had a big rally here in oil. What will really be the crux here is how long the Saudi Arabian oil supply disruption lasts for. Is it a blip on the radar for a day, a couple of days, etc.? And this knee-jerk reaction to the price of oil will gradually retrace, or is this going to be a longer-term issue where supply is reduced for a longer period of time, and potentially an escalation in events in the Middle East. So that's really what we see here for one day. Obviously, anything that moves 10% is obviously a significant move, or over 10%. But what we'll be looking at down the road is just how long this lasts for. So that takes me nicely into my technical piece to end the commentary. Obviously, oil was the big shaker and mover today. This is a US oil crude chart, 2-hour chart. You can see here we had this gap over the weekend higher, which took us up to around about 63.33. The levels I really want to point out here, and they are big picture levels, but obviously, we could have one or two scenarios here. The Middle East really blows up, in which case one would expect the price of oil to rally, or we get a gradual resumption of supply in Saudi Arabia, and this just all blows over. To the downside, we can see, since the beginning of June, we've had 3 lows just ahead of 50.50. That you can call that a triple bottom, so that's definitely going to provide some strong support should we, for some reason, start heading back in that direction. If we go the other way and this rally continues, we can see a high of 66.57 from late April. And then if we go back to October of last year, early October last year, we have a major high at 76.88, which would certainly provide some strong resistance. So, those are kind of the big picture levels. The one thing I would say is going forward, especially, for the rest of the week, need to see how this one's going to play out. It's going to be volatile. So it's, get used to having some fairly big swings over and above what you would normally expect in the oil market. And with that, I should wish you a pleasant evening or morning or afternoon, wherever you happen to be reading this, and look forward to speaking with you tomorrow. Cheers.